Greetings and welcome to the weekly edition of the Safe Crypto Show. I am your host, Tyler Jordan, with co-hosts Mike and Jason. Each episode attempts to cover a range of topics, beginning with a global market cap review and a look at the past week's movers and shakers. Next, a discussion of general crypto news and happenings. Then we consider new and interesting projects and ICOs, all followed by a brief discussion of the weekly tech update by MAIDSAFE. Let's get started with the show. Safe Crypto Show disclaimer. Please keep in mind at all times that we, the hosts and guests of the Safe Crypto Show, are not offering or giving investment advice. We only state our personal opinions and thoughts on our own interests. By watching, you agree to not hold us responsible for any losses you may incur by executing trades or by maintaining holds based upon the subjects discussed in our episodes. It is Friday, the 30th of March, 2018. Today I'm joined by my co-host Mike. So let's begin. Welcome, Mike. Thanks for joining the show today.
Glad to be here once again.
So let's get started with the global market cap review. Today we're also going to do an extended market cap review for fun and giggles. See, as we can see, just looking at the cryptocurrency market capitalization, coinmarketcap.com. In the top 10, everything is red today. Yuck. Okay, let's go into the global market cap now. Start with the 7-day as we usually do. See how things are going there. They're going badly. See, we had the beginning of the week around 330 to 320 billion dollars global market cap, and we're ending this week with $256 billion. What do you think?
It's going the wrong direction. It's supposed to go up. Go up, go up.
Yeah, there's still quite a bit of profit taking. People aren't comfortable with the news coming out, I guess, and the global markets in general, not just crypto markets, but all the global markets are also not looking so good. I follow a lot of articles on Zero Hedge in different places as well that do economic news, and there's a lot of negativity right now, a lot of negativity. So I reckon that people are kind of pulling in and contracting and going to more liquid positions. That's my feeling. Yeah. So things generally are not looking so hot.
Well, it's still, I mean, you could go and look at it and compare it to what it was when it was at its peak, like we did last week as well. And, you know, one of the things that I'm going and seeing as far as for the market cap, you know, I don't know if I'm turning into some kind of an optimist, but I don't know if anyone would want to go and attribute that to me. But as far as for the pricing where it's at now at about 255 or thereabouts, you look back and, you know, the beginning of November last year, it was at 73. And then by the beginning of December, it was up to 150, 160 or thereabouts before it had the major run up. So even at 250, it's, yeah, I just did the 1 year, you know, to take a look at it and such. But, you know, even at the beginning of December last year, you know, we're still, what, all of December, January, February, March, 4 months, and we still haven't had everything vanish back to the prices that they were at the beginning of December yet. We're still 100 billion above what it was before the roller coaster ride went up and then, you know, came all the way back down. So
what you're saying is that we've got another 100 billion more to drop.
Well, you know, if you want to go, well, if you want to go back to more, you know,
well, let's do that.
Less volatile. If we're going to go and do stuff if we're going to go and compare it to stuff that's less volatile and whatnot, then you go back into, you know, last year at this time, 8 billion. You know, on the same day last year. So we're up a little bit from the 8 billion that we were on March 29th last year, 8.1 billion on a 1 year scale. And anyways, all last year, we were constantly amazed at how much it's going up. Oh my gosh, it's at 20 billion, 40 billion, 50 billion, 100 billion. And then it have some retracements go from, 85 back down to 60 and 70. And then through the last quarter of last year, it almost did nothing but go up, 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 up until, it was reminiscent, like our discussion that we had earlier offline, was watching the markets last year, especially towards the end, reminded me of 2013 when Bitcoin went from 30 bucks a pop all the way up to its peak of about 1100. Now, it did that in a very short amount of time. It was longer than the 1 month that it took for it to go the glorious December of last year when it went from 140 up to 830, in a month. I mean, it just went straight up. And it did the same thing. If you go and look at the charts for all time, you go and you look, and at the end of 2013, there was a vertical line as well. Now, granted, you have to,
right?
yeah, the end of 2013, early 2014, you had the big, straight up and then back down that it did. And that was basically, it peaked out at, just under 2 billion back then. But the market of Bitcoin was the entirety of it. They didn't have all the other coins back then, so the market cap or the market dominance for Bitcoin was
what date are you
almost all.
saying? Because when I'm looking at
This is back in October, November, December of 2013.
Okay, well, I'm like December 4th, 2013. The market cap was 14.67 billion. That's what it peaked at.
Oh, that was excluding Bitcoin. All right, never mind. I was on the wrong chart. I was on the other stuff besides Bitcoin.
Right. Okay.
So yeah. So as far as for that, that's the thing that it was. Yeah. So in this case, I mean, you're looking at something that, back at that particular point in time when Mt. Gox was doing its thing, that was the run up that went up to Bitcoin prices at around, $1,100, $1,200 a pop. And then Mt. Gox had its issues and thug, it sprung back up, but it pretty much went boom, boom, and it did the double bounce, and then slowly made its way down over the course of a whole entire year, going down until it was around 200 and some bucks a pop, until 2016 when it started turning around and started going back up to the $300, $400, $500, $600, and then at the beginning of last year, it just started going up, 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 and it didn't really have any retracements and stuff. It just continually went, a little bit higher, a little bit higher, a little bit higher until we saw the 20,000 that it hit, at the end of last year. But anyways, as far as for that, the thing that I go and look at when I'm looking at these longer term charts is, where did we see, prices, what were they 4 months ago, 6 months ago? And we're still way up, even considering those prices. Now, a lot of people who bought during January are thinking, man, I'm down 40%, 50% or more. We've been in this market since 2014, 2015 with our MAIDSAFE anyways. We got that just after they had their ICO on Mastercoin and stuff. But as far as for that, we've held it since, MAIDSAFE was less than a penny each. So, seeing the rise and fall and stuff, I mean, it's all par for the course for us. But for those who are newer to the game or brand new, they're seeing, man, my investment has been ravaged. And, one of the things I go and look at is I kind of wonder where's it going to turn around? Where's the bottom at? I mean, anybody who's a chart watcher is going to be wondering that. And it's hard to pick.
I pulled up the chart I've made with a little trend line in there from the beginning. And so now viewers can see that. I think what important considerations here is that I'm looking at this chart on the logarithmic scale, which is really important when you're looking at anything that has exponential growth, because otherwise it's really difficult to see what's going on. And because cryptocurrencies are a pretty young market, there is a lot of exponential growth, and also given that in this chart what you're looking at here isn't it starts out with pretty much just Bitcoin, but then we're also seeing the addition of new coins as we come along too. So the whole market is really expanding. So this is really major exponential growth happening here.
Well,
And so the log scale is really important as to start with. And then the trend line, then that's kind of a linear progression along the exponential scale, the
mhm.
log scale. So what I'm seeing, is that we did kind of pop into a bit of a bubble there back in December-ish, and it seems now we're coming down to back down to that trend line. Historically, what we can see though is that when these sorts of bubbles happen, is that the market cap, the total market cap is going, historically has anyway, it's dropped down below the trend line for a long period of time, and it took it a while before it came back up to the trend line, and then goes into another bubble mode
Mhm.
again, another mania. So
Yeah, I
um,
think a mania or the irrational exuberance that they referred to the Nasdaq bubble at the end of 1999, 2000, and such.
the dot
They
com bubble.
Yeah, the dot com, and that they called irrational exuberance and stuff like that. But the way I go and see that is with the way that fiat currency works, where they can go and just use a few key clicks on their computer and generate whoever who knows how much money. you know the quantitative easing was running about $85 billion a month of additional money flowing into the system and whatnot, and when it's all said and done, that money has to go somewhere. And the irrational exuberance that some people go and it's a bubble is just people and money looking for a place to stay. Now, people generally want their money that they invest to go up in value, unless you got a specific reason for not caring if it goes up or down. You want it to go up in value pretty much, typically. And when you get speculators in a market, you have a tendency for it to go and do the vertical lines up, or it goes and looks like a very, very steep mountain range going up, up, up really high on one side, and then eventually you're going to get to the top, and it's going to go and it's going to come down, sometimes as quickly as it went up. Now, that happens on each particular crypto in and of itself, or it could happen to the total market cap and whatnot. But what I go and look at is a different chart that looks more like it's a slow, flat, rise, and then there's a vertical, where the graph turns vertical, and then eventually you hit a plateau at the top, and then it flattens back out again after the giant vertical line. Now, was the run up that we saw at the December and January, first part of January, was that vertical line? Not even close. Because when you go and look at it, there's two different aspects to the the situation the way I see it. One is whenever you have a brand new world-changing idea or technology, there's a period of time where people are discovering what this is. That's the information. And that's basically the idea is being spread person to person to person typically, or sometimes it'll get some press, and people who follow that particular press will be exposed to the idea, etc. In 2009, when Bitcoin first made its debut, nobody had heard about it, and it wasn't until 2009, flat as a board. And then you get a lot more people are hearing about it, 2010, 2011, and you see a little bit of activity on it, and the price isn't 5 Bitcoins for a penny anymore. Seven Bitcoins for a buck, 14 cents. Now it's $1 a piece. Now it's $3 a piece, until you get the first Bitcoin, first Bitcoin quote unquote bubble, where the price went up to 30 some dollars. We actually watched it go and do that. And it's like, oh well, how can we go and set up a miner to go and do this? Back when you could go and mine with your CPU, you'd never get even bit dust. You would barely get Satoshis trying to mine with a CPU these days, and you get video cards and you're still in the same boat because the technology's gone so far beyond. But one of the things that you end up with as the adoption rate happens, there's information, and that's its own line, and then there's the adoption, and that's another line that trails behind the information line. And last year was a very important piece of time for cryptocurrencies in general, because now you're starting to see the knowledge of cryptocurrencies it's done with its first flat part, and now it's turning into the vertical part, to where you could go and ask most people on the street. You go and ask them, what do you know about bitcoins or cryptocurrencies? And now you'll start hearing a lot of people will have heard of bitcoins and heard of cryptocurrencies. We're well into the vertical line of knowledge of this new technology. And then behind that, lagging a certain amount of time, is the adoption. We're still in the little flat, run up in the adoption rate for cryptos.
We're definitely in the growth phase. I mean, that's the point of the log scale. You don't use a log scale once you've ended the growth phase. As a
Right.
microbiologist, we have the growth curve. Things start out really slow, then it goes this exponential curve upward, and then it
Right.
plateaus and it flattens off.
Right.
And on a log scale, that just looks like a linear line. That's the point of the log scale. It gives you
Yeah.
that ability to see it as a linear line.
Yeah. And what I'm suggesting for cryptos is, one, I believe that it's a world-changing technology, and that cryptos is just the same as computers were in the early 80s. It's just the same as the internet was in the early 90s. It's just the same as cell phones were in the early 2000s. And now we have cryptos. It's another world-changing technology, and the adoption rate of this is going to follow the same things. People who go and say,
Yeah.
"Oh, it's a bubble, its time is over, and cryptos are going away." No, they're not. Those people are they're horribly misinformed, and I don't think they really understand. They either, one, have not taken the time to look into it, or they're just listening to what other people are saying, who they may follow on their various social feeds. But the question is what do they know about the markets? What do they understand about crypto? What is the thing that everybody's excited about? And when you go and look at what some of these projects do, it's a situation where things are going to go and dramatically change due to crypto. And
Yeah.
as far as for what I'm seeing is you get some irrational exuberance that is a result, and I think that the run up to the 800 billions and such was a result of some people who are either chasing money, chasing dollars, or speculators, and they're just chasing where the money is rapidly causing profits and stuff. And those people will be out of crypto when it's not going up. And then when it comes back around and it gets some more exuberance, they'll jump right back in. And those are just basically, those are the parasites of the system looking to make a quick buck. And do whatever you want, people, make money, lose money. It's however you want to go and do it if you're a speculator, But what I see are the people who are the early adopters, who are the people who invest, and they invest minimally, but they invest wisely, And as far as for that, even a little investment before mass adoption can grow very, very nicely. It's like a little bamboo tree. Little bamboo tree, you go and you water and fertilize it for years before it finally grows 90 feet in a year. Now granted, that may not be the case for everything, and Bitcoin may have that same growth ahead of it, but I still think that as far as for the market, even though it's down, even though the value of the investments are down somewhat lowish, you go and compare them to what it was a year ago at this time a year ago, and it's amazing, the run up. So
Well, I think it's important that at any time, but in particular in times like these, that people do their due diligence and invest in good projects and not the crappy ones. And there is so much bad stuff out there
Oh, for
coming up
sure.
all the time. And a lot of these, I mean, the Bitcoin dominance thing, I think, is due to the fact that Bitcoin is the most liquid. Bitcoin and Ethereum are the most liquid kind of currencies now because most exchanges that do have fiat to Bitcoin trading pairs will do Bitcoin, and some will do Ethereum, but not many will do any others. So I think that's a big point to Bitcoin dominance. We're going to mention that later on in the show as well because some news came out today about, or not today, but this week about that. But yeah, I think that's very interesting. The other thing there is that people tend to go to a store of value when they're feeling like things are a bit discouraging, and Bitcoin is a good store of value. On the other hand, though, a store of value is really not a good thing for the economy. It doesn't support development, it doesn't support growth, and it pulls money out really of the active economy and puts it into a store of value. So for me, I don't like things like that. I want to invest in things that are projects that have an active team or people are developing new technology. That to me is where the interesting things happen, and it's also where the future lies. So yeah, I don't like Bitcoin personally, and just for what it is. If you were buying or selling something and you need to go into a medium of exchange that's commonly accepted, then yeah, Bitcoin's good for that. But otherwise, I don't think it is personally. I look at the global market cap history and this trend line that I made here, which may not be super accurate. I just eyeballed that, so I don't know where the actual line is. But to me, it seems like we're going back toward that trend line, and historically, I think you kind of go under it and then come back up again, and we could go under this trend line, and stay under it for quite some time. I don't personally know what the future is here, but I see the global economy is not doing so well. There's a lot of negative news, and I could see us going well below this trend line personally, and staying under it for a few years even before it comes back up. Now this is an exponential trend line, you understand. So even if it goes under it, doesn't mean that the growth stops. It just means that it's slowing down, right? So that's an important distinction when you're looking at a logarithmic scale. But we've gone on with this long enough. Let's get on to the news today. So we have here, first off, oh wait, we skipped over Blocktivity. We'll just briefly have a look at that because there was an interesting bit. Ethereum today, 39,160 unconfirmed transactions. That's up about fivefold, not quite fivefold over what it was last week. Ethereum's having a lot of problems, folks, and it's getting bad. I'm really concerned that in pretty short term, if something doesn't happen, Ethereum's going to suffer some major problems for moving. I can see the gas price really exploding out. Anyway, on to the news. The first news item we have today, BitThumb exchange to bring crypto payments to 8,000 South Korean merchants by 2019. Major South Korean exchange BitThumb will allow its users to pay with cryptocurrency in 8,000 brick-and-mortar outlets by the end of 2018. In a pioneering move for cryptocurrency payments in South Korea, BitThumb will partner with digital payment services provider KoreaPay to facilitate purchases for its users. Now, KoreaPay is a point-of-sale system, or company that provides a point-of-sale system for brick-and-mortar businesses. So this is, again, kind of like Square. Square does this too, provides point-of-sale systems for retailers. And this one is pretty much a Korean-based one. But Korea is a big crypto hub, and so this is great news. It's going to allow more people to trade with crypto, and we like to see that. That's good for adoption and good for crypto markets in general. Our next bit of news today, Coinbase paves way for new altcoin support with ERC20 upgrade. So they're going to allow ERC20 coins to be traded on Coinbase. I'm guessing that's maybe with fiat pairs because that's primarily what Coinbase does. I could be wrong though, but that's my take on it.
Yeah, Coinbase is the easiest way for those of us in America to, we basically hook our bank account information to Coinbase, and it allows us to essentially pay with a bank transfer for buying the coins that we collect from Coinbase. The one downside is the Coinbase, when you convert from cash or from a bank account to the Coinbase account, it takes a significant chunk of time. I think it's about a week before the coins actually go into your online wallet and whatnot, and when you have access to them. Large part of that, I think, is for chargebacks, make sure that the transaction is going through, it's not being contested, etc. And I understand that as a business reason for that. It just takes an awful long time to go and convert from cash into, or fiat into the crypto using Coinbase. But I understand the reasons for it. I don't think there's anything untoward with that, but it is kind of on the slow side.
Part of their business model. I do recommend local Bitcoins for people who want to get in and out of the market a little more quickly. I mean, there is maybe perhaps more risk than dealing with an exchange like Coinbase, but I've had good success. You find a good trusted trader on there and you'd probably be all right. But that's my feeling. But this is very interesting because so many people use Coinbase, and what I'm seeing here is that depending on how many and what kind of ERC20 tokens they put on their system, because an ERC20 token is a standard Ethereum token. There's hundreds of these tokens now for different projects, and I presume they're going to put some of the more common ones on there, maybe like EOS. Currently, EOS is an ERC20. It won't be come July or August or something when they launch their system, but but that's another story. Anyway, I don't want to digress too far. So depending on what kind of tokens they put on there, people, if they're able to buy directly, because currently if someone wanted to buy something like EOS token, they would have to buy Bitcoin or Ethereum on Coinbase, and then they'd have to go to another exchange and then convert it into the token that they wanted there. And so in that process, basically these other coins become intermediate coins to getting the coin you want. And that, to me, I think helps to facilitate the dominance of Bitcoin and Ethereum in the marketplace. So with this sort of thing happening, the ability of people to buy the token they want directly, I think this could lead to a decrease in the dominance of Bitcoin and Ethereum. It's my little take on it.
Yeah, the more that we have equality in the markets as far as for which crypto pairs are included in the markets, the more markets, the less reliance on an intermediary coin to go, say, from say Cardano to to Tether to just pick any one of them and see a coin or whatever, and you can go and run from one to the next, but if you can go directly between the two, then I think that ends up going and being a much better situation for all the coins involved, is if they're able to go and be exchanged directly rather than having to go through an intermediary to get there. So
yeah, and that's basically ERC20. Not all those things are ERC20, but the more things they get on there, the better, I reckon, and the better for people, because it's less fees, it's less having to trade between different currencies. You incur less trading fees as well.
Mm-hmm.
All right, our next bit of news, new data, U.S. students and payroll becoming more involved in crypto. And this is so according to a survey conducted between March 16th and the 20th by the Student Loan Report, 21.2% of college students have used loan money to fund cryptocurrency investment. The students were attempting to take advantage of upward price volatility in Bitcoin or Ethereum to pay off their debts faster. Now that's, I guess that could be a mixed bag. I guess if you get in, you have plenty of time for the crypto market to mature, then you might do okay. But if you get in late and then have to make payments, you could end up in a bad situation. I reckon there's quite a few students now who've done this who might be feeling like they're in a pretty bad situation at the moment.
There's a saying, don't gamble with the rent money, but
yeah.
When you're young, you tend not to know all the things that come with being ancient like we are.
Yeah, well, when you're young, I guess you have time to make it up if things go bad. And I suppose if they put it in there and they just sit on it, even if it's gone sour at the moment, if they just sit on it, and they can sit on it for 5 to 10 years, they'll probably be sitting pretty. But
That's one thing
you got to
that's
have the patience, and that's what a lot of young people lack is patience. So
that's one thing to that's a hard thing to go and do when you see your investment ravaged. Is it's really hard not to go and sell, but when you sell at a loss, you lock in that loss. So,
that's right.
I know that it's tough to go and do that, but sometimes you just gotta, take the pain, as
If there's
some of
any
the movie
students
people
out there
say.
listening, be patient. Be patient if you got in, and if you didn't, then you might want to wait a little while because I don't think markets are going to turn around right away, personally. Our final news item for the day, Yahoo Japan, that's the Japan division of Yahoo Corporation, plans to launch an exchange in 2019 after a $19 million buyout. So the Japanese arm of internet giant Yahoo will open a cryptocurrency exchange in April 2019 or later. Local media Nikkei Asian Review reports today on March 23rd. According to Nikkei Asian Review, Yahoo Japan will buy 40% of BitArg. BitArg. ARG. It's a pirates exchange. I don't know what that means, BitArg. Exchange in Tokyo next month, and immediately dispatch executives to lay the foundations for the exchange to launch a year later. The purchase of BitArg shares will be made through Tokyo's YJFX, a wholly owned Yahoo subsidiary that operates foreign exchange transaction services, the publication reports, adding that the 40% stake will cost the company 2 billion yen, or $19 million. The move by Yahoo brings a further big name to Japan's fledgling regulated cryptocurrency exchange arena. Well, to the global arena too, because I mean, if this works out for Yahoo, I could see them doing this in other countries and integrating it all. They could become a major player here, Yahoo, with their brand, I reckon. Crypto exchange licensing scheme that began in April 2017 has now seen a total of 16 operators cleared to serve the Japanese market. So it's growing, folks. So that's interesting. I think there are a couple of exchanges in Japan that are closing because of the regulation. I read that the other day as well. So I think that there's some shakeups happening, but there are a lot of exchanges, and I expect that really there's probably going to be too many in the end. But we'll see. We'll see what happens. That's just my gut. Well, our last segment is the MaidSafe update. We have some interesting news there this week. So I'll go through the highlights. The first highlight is what I find the most interesting and funny. We revealed details of our connection with HBO's popular Silicon Valley TV series this week. And you can read more about it on their blog and also on Medium. Those are links there in the update. Number two, in order to resolve a few security vulnerabilities reported for the Electron package, the front-end team is preparing to release a new patch for the SafeBeaker browser. Number three, for the same reason, to solve the security issue reported for Electron, the front-end team also made available a new build of their Peruse browser. And number four, part of the front-end team started to focus on the development of the new development website this week, not only to work on the user interface, user experience aspects of it, but also to start defining and creating the content for it. And lastly, the routing team is currently split into two teams looking deeper at consensus ordering. One team is looking at an improvement to an algorithm we have for that, and the other is integrating an ordering algorithm in routing itself. So the first one's really interesting. I was watching this episode, the latest episode of season 5, episode 1 of Silicon Valley, which came out this week, and in the credits, let me just, I didn't pull that up properly. Let me see what I can do. I think it's over here. In the credits there, you can see technical advisors. It lists several people who are on the MaidSafe team. The credits of Silicon Valley. That was hilarious. I was like shocked. I've been watching Silicon Valley since it started, and I recognize, I think last year, they started talking in the show about how they were building a decentralized internet, or that became one of the theme things going on with the show. And I thought, wow, that's what MaidSafe's doing. And here it turns out that they've been talking with them. I'll just read the Medium blog here, beginning part of it anyway. Over the last year, we've watched with interest as the tech industry press published various articles inspired by HBO's hugely popular Silicon Valley TV show. Although the show is one of those rare beasts, one that's both funny and accurate about the industry that it's parroting, it was the story of an attempt by a wacky startup to pivot and build a decentralized internet that really captured their attention. As the articles point out, the startup's idea is not quite as crazy as it first sounds, with each one explaining that this type of work is actually taking place in the real world. For the most part, these articles then focused on a few specific companies who've recently been working in a similar area, but there was little, if any, mention of MAIDSAFE or the SAFE network. So for those who watched the series premiere earlier this week, the eagle-eyed amongst you may have noticed a few familiar names at the end of the show. Yes, that's right. David, Nick, and Viv have had a number of conversations behind the scenes with the team behind Silicon Valley. We were delighted to provide advice to the production team of Silicon Valley, including a face-to-face meeting at the studios in Hollywood. Mind you, we're not holding out for that trip in kilts to the Emmys quite yet. You might ask why, with so many other things going on, we got involved. The answer is quite straightforward, really. As one of the most established groups in this area, we've been working away at building a new decentralized internet since 2006. We understand both the crucial importance and the complexity of pulling off such an audacious goal, and will continue to do all that we can to support the awareness of what a decentralized web means for the world. The link to this article will be in the show notes, but check it out. This is great marketing and great news, and just a lot of fun, really. It's been a lot of fun for the community this week, learning about this and discussing it. So that's really all I'm gonna do for this video. I think we've gone a bit long because we went into a pretty good discussion there on the global market cap history. You have any last thing you'd like to add, Mike?
I need to go and watch that episode of Silicon Valley.
Yes.
It's a show I follow. I didn't know it started up another season, so it'll be something on my list to watch for sure.
So that's all we have for today, folks. I'd like to thank both our viewers and my co-hosts for joining me today. We hope you found the episode informative and helpful. Please subscribe, like, comment, share our video with others, and smash the bell button. Tune in next week for another interesting episode.
All right. Take it easy, everyone.
Bye.